GMMB Academy. In this class, we're looking at the financial accounting. And we want to welcome a professor, which is a profound professor in financial analysis, accounting analysis. You don't want to miss his class. There's nobody else but Professor Sir Gary Sampson. You're welcome, sir. You're going to enjoy yourself. Thank you, sir.
All right. Good afternoon. I'm looking at this question, and this is a question now. This is an illustration that is we are asked to what? Show the double entry principles for each transaction. So, we have discussed about the double entry principle. So now this is a question, an illustration, so you can understand how to apply it. Now, before we move further, there's something you need to understand. I explained that in JAM, they will ask you a question like this: what should be debit, what should be credit? Or they might ask you that is the effect. What will be the effect? So they might ask you in that way. Now, how do we understand the effect? How do we know the effect? And I explained that the effect is when you want to know if the value or the asset or the income or the liability or the expenses is increasing or decreasing. Now, take note of this. That is, when asset is increasing, that means is at the debit side. That means when an asset is at the debit side, it means that there is an increase in the value of the asset. There is an increase in asset. But when an asset is said to be credited, that means there is a decrease in asset. It means that there is a decrease in asset. That is decrease in asset. Now, but when an expenses is at the other side, it means that there is an increase in the expenses. There is an increase in expenses. That is expenses. Now, when we have that of the income, when an expenses is at the credit side, it means that there is a decrease in expenses. That's the effect. When an expense is at the credit side, that means there is a decrease in that of the expenses. Now, when we now talk about the income, when the income is at the debit side, that means there is a decrease in income. There is a decrease in income. But when the income is at the credit side, it means that there is what we call an increase in income. When I mean income, I'm also referring to revenue. That is revenue, or refers to what? Sales. That is refers to sales. That means I'm referring to sales, or refers to revenue. So that means there is an increase. When it has a credit balance, when it is at the credit side, it means that that is increase in income. Now, but if it's at the debit side, it means there is a decrease in income. Now, let's look at the liability. Now, the liability, if the liability is at the credit side, it means that is increasing in terms of value. There's an increase in terms of value. But when the liability is at the debit side, it means there is a decrease. That's the effect. That's what I mean by the effect. These are the effect. You must understand the effect very well. Alright, well, let's move further. Now, looking at the next question now, what you are asked to do is to show the double entry principles for each transaction. So these are the transactions. Now, this is the transaction that has been made by a company. So I have to clear this. So these are the transactions that will be taking place in a particular enterprise, which is the name of the enterprise is Olu Enterprise, and these have been recorded in a book. I repeat now, these are recorded in a particular book. Alright, now, how do we now treat things? We want to apply the double entry principle. How do we apply the double entry principle with these following transactions? Now, let's start with the first one. Now, I'm going to use, I told you we have two ways of presenting this, but I'm going to use the T format, which is just exactly looks like ledger. So I'm going to use the T format to explain this. I purposely explain, I want to do this so you can understand it very well. Alright, so now we look at the first one. They said that is the transaction Olu Enterprise did for the year 2022. That is, this article transaction, this company, this enterprise, that is the name of the company, we did for the year 2022. Now look at the first, that is the 1st of January 2022. Cash sales 900,000 naira. So if you can remember or go back to the previous class, you see that whenever you are trying to identify the two main accounts, then secondly there must be a monetary debt there, which is the value, and you should be able to identify what should be debit and what should be credit. Now, looking at this cash sales, so these are the two major accounts now. So I'm going to prepare the two accounts, that is the two ledger accounts I'm going to prepare, or the which is the cash. There is debit, credit. Then I'm going to prepare my sales. Here we have the debit, and here we have the credit. So let me draw it down here. Draw it down here. We have the sales, debit, and then credit. Now please take note, I'm going to move further. Now we have the cash sales. Now cash sales 900,000. Cash sales 900,000. Cash sales 900,000. So the next thing now is we have already what? Identify the two main accounts. Then the next thing now is what should I debit, what should I credit? Now cash sales 900,000 naira. Now if you look at the sales, that means you are selling something, so the goods is going out. So it will be at the credit side. You write the date. The date is the 1st of January 2022. Then the details is what? Cash. Then value, which is 900,000 naira. Then the opposite, that's the corresponding entry number, should be at the debit side. So where we have, what am I going to write? The same date, still 1st of January 2022. So here I'm going to write sales. Then the value is 900,000 naira. That's the corresponding. Now, I can ask what the effect. The effect there is now, there is what? Increase in terms of asset, because cash is an asset. And what type of asset is that? Is current asset. So there's an increase in cash because you make a sales, so cash comes in. So your cash increase. Now, when your sales is at the credit side, that is increase in terms of your revenue, increase in revenue because you make sales. So you're able to sell the goods. So there's an increase in sales. Because as a business, you are planning to make more sales. That you need to sell more of the goods instead of being at the stock or warehouse. So you need to make more sales. So you need to increase your sales. So now that's why it's at credit side. So that's increase in revenue. Now that's one by the way. That's the effect of that. Now let's go to the next transaction, which is the 2nd of January 2022. Payment of office rent, 250,000 naira in cash. So now we identify the two major accounts. What are the two major accounts you need to prepare there? Which is the office rent and that of the cash. That's the two major accounts there. Office rent and that of the cash. So now how do I prepare that? So I will now prepare the two ledger accounts. I'm going to use this because there's something I'm going to do. It's going to balance it. Alright, so we have the office rent. Here we have the debit. Here we have the credit. Alright, then here I have my cash. Okay, I don't need to prepare my cash again. You know why? Because the cash is already there already. So I don't need to draw the ledger of the cash. Since it's already prepared here. So I'll just post it there. I'll post it there. Alright, now payment of office rent 250,000 naira in cash. Now how do I do that? The first thing you need to do is identify the two major accounts, which are the office rent and that of the cash. Alright. Then what's the monetary value there? The monetary value of the monthly debt there is 250,000 naira. Now we have done that. The next thing now is what am I going to do? We need to identify who am I going to debit and who am I going to credit. Who am I to debit and who am I to credit? Now what would I do now? Who am I to debit? Look at this. It's here payment of office rent 250,000 in cash. So we are paying. So Olu as a company or as an enterprise is paying for the office rent. Maybe it's just like you have an apartment. You need to pay for where you are making use to do your business. So you need to pay rent for it, so you can have access to it, so you can make use of it. So you need to pay a certain sum to make sure that they can give you that place to do your business. Alright, now, so a payment of office rent of 250,000 in cash. So that is, you need to debit what? Our office rent, then credit our cash. What is it? Why? Because Olu Enterprise is paying for that office, for that apartment, for the place is using for the business that is paying for that office that is using as his business. So you need to pay. So the money is going out, so you need to pay. So that is why it will be at credit side. That is, you need to credit your cash because the cash is going out. You are making a payment. Then the office rent, that means that they are receiving, that is the person you are paying to. So that is, you are paying on what? You are paying for what? You are paying for the rent. So that is why you debit the rent because they will collect the money from you. So in this company, in terms of prepare the office rent and cash, that is for that. Alright, so but if the office rent, just for instance now, is paying for the place it's using. So if the other company, the owner of this, the owner of the office, or the owner of the company or the business, if this person wants to pay or wants to prepare their account, so he's going to pay in a vice versa way. Alright, we'll discuss more of that later. Alright, so now the office rent should be at the where debit side. Now what's the date? The date is 2nd of January 2022. Then what am I going to write? I'm going to write cash. I'm going to write cash. Then the value is, I'm going to write cash. You don't mind me. I'm going to just trying to value what? 250,000. Alright? 250,000. Alright. So this is obviously I'm trying to write it down so you can see it clearly. So we have cash, which should be here, right? Date 2nd of January 2022. So here we have the cash. Then the value is how much, which is 250,000 naira. 250,000 naira. So that's for the office rent. Now the corresponding entry of that, which is this, where we want cash, because we know we were the two main account we need to prepare there is the office rent and that of the cash. So the corresponding of it will be at the credit side. So I'll write the date, which is 2nd of January 2022. Then the corresponding of it is what the office rent. Let me just write it. It's the same thing. Then you write 250,000 naira. 250,000 naira. 250,000. Alright, now in this case now you can see that what happens to our asset. Now the effect there is what? A decrease in our asset. That is what happens to your money. Your money has decreased because you are paying. That's why it's decreased in asset. And we know that cash is an asset. So that means there's what we call a decrease in the value you have with you. Because you are paying for a certain thing. Then there will be an increase for this. Why? Because it's receiving. So that's why increase in terms of expenses, because on the debit side decrease in the increase in expenses. I'm just explaining the effect. Then why this one in terms of asset there will be what? Decrease because you are paying for it and the credit side. Then the next one is purchase motor van. Purchase motor van. Purchase motor van. I'm going to make use of this. side, because there's something I'm going to do. Purchase of motor van for 40,000 naira buy, check. For 40,000 naira buy, check. Alright, so what are two major accounts there? The two major accounts there is the motor van and check. Please take note. No, it's not going to be purchase and check. Why? Because they specify what you are buying. What you are buying is specified, and what which is what? Motor van. So you are purchasing motor van. That means you are buying an asset which is a fixed asset, or we call it non-current asset. So you are buying this with a check of 40,000 naira. So that's why the major account to prepare is the motor van and that of the check. And this check will now be in form of bank. Why? Because when you collect a check, for you to get the value of the money, you need to get to bank. You need to get to bank to get the real cash. Are you with me? So you need to get to bank to get the real cash. So you go along with your check. So that is why when you are preparing this kind of account, you need to prepare the motor van, instead motor van and bank. So it should not be motor van and check, it was motor van and bank. Why is it bank? Because check, you need to take the check to bank. Alright, so now we have the motor van. So I'm going to abbreviate it. I'll abbreviate this is motor van, please take note of that. Then we have the bank. We have the bank. Now you have done that, debit, this is credit, this is debit, and this is credit. Alright, so then the next time is who am I to debit, who am I to credit? Purchase motor van for 40,000 buy, check. That means when you are buying something, you need to pay for what you are buying. And you are paying in what? In check. So that is why we are going to debit our motor van and we credit our bank. We debit our motor van and credit our bank. Why we credit our bank? Because you are paying for what you are buying. So you buy, as you buy, you pay for it. Either you pay in cash or check. So now, but in this case, it's paying by check. So now we debit the motor van. The date is 3rd of January 2022. So I'm going to write back. Then the value will be what? 40,000. The value there will be 40,000 at the debit side. So the corresponding of that will be at the credit side of the bank account. So here I'm going to go to my credit side. Then I'll write the same date is the 3rd of January 2022. Then I'm going to write the motor van, which is the corresponding entry of it. Then the value is 40,000 naira. So that is binary. So now if we have seen what the effect, what will be the effect there is this? There is what? Increase in the value of asset, which is the motor van. That is the increase in the value of the asset, which is the fixed asset, or we call it non-current asset, the motor van. That is an increase in the value of that. That is the effect of that. Then while in the bank, there is what? A decrease in the value, because you are paying for it, your account or the value of your money is reducing. So that's why it is a decrease in asset. And what kind of asset is that? Current asset. Current asset. So there's a decrease in the value of the asset. In this case, which is the current asset, and that is that of the bank. Alright. Now, the next one is bought goods. So let me do this again. Bought goods on credit from Georgia. Bought goods on credit from Georgia. Now, in this case now, what type of transaction is that? This is called a credit transaction. Why? Because you are buying something on credit. You are not making any payment. No payment is made. You are not receiving any cash. So you are buying something on credit. So this is a credit transaction. So take note of that. Now, we have to prepare the two major accounts. What are the two major accounts then? Which is the charger company, because the name of the enterprise is Olu Enterprise, is buying from charger. So what's the point? That is their bulk goods. So that bulk goods, they don't specify what is buying. So that is why you make it of the purchase. So that part there is still the same thing as purchase. Purchase goods on credit from Georgia Limited. what's the price? 85,000 naira. So we prepare the two account there. What are the two accounts we prepare there? The purchase and that of the charger. Now I am purchase. So they said bought. So it should be purchased. When it's bought goods, so because they did not specify the kind of goods he purchased or he bought. So that's why we use the word purchase. But if it is specified, you don't need to write purchase. You write what exactly the purchase, what exactly the asset or whatever it is. So what you are going to write, just like the previous one, purchase motor van, the motor van we wrote, because they specify goods purchase. Alright, in this case, it's not specified. So we have the purchase, here we have the debit, here we have the credit. Alright, then this side we have what we say, judgment. So we have debit and we have the credit. Now we have done that. Next time is who am I to debit, who am I to credit? Now if you look at this, so we are going to debit who? We are going to debit purchase because we are receiving. From who? From Jaja. So Jaja is giving. That's the company they are purchasing from. So the Jaja is giving, so we credit Jaja. You know, I told you, credit the giver, then debit the receiver. So now, in this case, but we are receiving, purchase, buy, you receive. So we are going to debit that. So what date is that? Which is the 4th of January. 4th of January 2022. You write what? Jaja. Who are you buying from? You are buying from Jaja. And what's the price? We know it's on credit. So how much is it? 85,000 naira. So in this case, we still discuss what we call how to treat debtors and creditors. In this case now, if you look at this scenario, this transaction of this, what goes on credit from Jaja, you see that first person, the company there is creditors. So there's a way we treat creditors. We have what we call the purchase table. When we talk about the purchase table, we talk about the purchase of journal, or we discuss about the control account. That is how you control your debt. And we have two types of control account. When we talk about the debtors control account, which is also known as the purchase. We have the debtors control account, where we have the sales ledger control account, also known as debtors control account. Then we have what we call the purchase ledger control account, which is also known as creditors control account. So, you know, in this case now, this one is a purchase ledger account, which can also call that purchase ledger control account, because you are buying something on credit. So in this case, Odo Enterprise is creditors to Jaja. Alright, see, it's not more of that, but besides more of that, when we talk about the control account. So now, what goes on credit from Jaja? So you are buying something on credit, so you purchase, but you receive the goods, but you have not paid. So you are owing. So you have not paid for what you bought, but you have received it. So that's why you debiting. The Jaja will credit because it goes going out. So and it's received from Jaja. That is when your Jaja is giving the goods out. So you have to credit Jaja. Then date is 4th of January 2022. Then you write the corresponding number which is going to be purchased. Then the value. This number you guys writing this, of course, it's something now you have to balance it. That's right. Then the value there is 85,000. 85,000. Alright, then the last part, which is the 5th of January 2022, sold goods on credit to Sule, 50,000 naira. So sold goods on credit to Sule, 50,000 naira. Alright, sold goods on credit. Now, what are the two ledger account there? That is the sales and that of Sule. Why? The selling of credit. This type of transaction is a credit transaction. They are selling of credit. Okay, let me now explain. There, the effect between there is increase in what? Index. That is that of your revenue. That is income now. There is an increase because you purchase, you receive. Here also as well there is what? this is sorry, there's an increase in this, while this one is what decrease. Why? Why is it like that? Because this is debit while the other one is credit. But we still talk about that much on that. Why? Because there's something special in this situation of credit. Because in this case now, you know that this person is buying something on credit. Getting on credit, we should be treated as liability. Because because the liability, because you have not paid for what you bought or you have received it. But as a receipt, it will help you because once you sell, you have to refund the money. So there's an increase because you have received it. Okay? Then why here in Jaja, that is what? Also as well, Jaja is increased. Why? Because it's at credit side. So it's increased in Jaja, and why this one is also what? Increased. Because it's increased in value. This one is just like you sell. So it's buying from this particular company. So increase and increase. Alright. So this one is just like an increase in terms of liability. Alright. Why this one is that of increase in terms of revenue or income. Alright. So both of them is increase. Alright, so sales goes on Friday to Sunday. So we are doing the 2 million down there, we have the sales and that of the Sunday. Now already I think we have the sales there before. Alright, see the sales here. So you need to do another ledger since we have the sales ledger control account there already. So we now need to draw our what? Sunday. So we need to draw the Sunday account. Now this is the Sunday account now. The Sunday ledger account. Here we have debit and here we have credit. Now, that is how we need to do that. Who am I to do it? Oh, sorry, I'm cleaning the question. Alright, so those credits, that is today. I think the price is, I've cleaned it. Okay, I think it's 50,000. I see it again there. It's 50,000. Alright, let's make sure the value. So, source goods and credit to Sule. So now, because we're selling goods to Sule, so Sule should be at the debit side. So we debit Sule. Then the date is 5th of January 2022. Then we write what? Sales. The value 50,000. Then the corresponding entry of it is the sales. Then you go to your sales, write 5th of January 2022. Or we write the name of the person, the corresponding entry. This one will be Sule, which is 50,000. Alright, so the effect is that here in this case, there is what? Increase. Now in this case, now this person is a debtor. Sule is a debtor because we are selling to this person. So it's only Olu Enterprise. Why the other one is the Olu Enterprise? That's the name of the company, the name of the transaction of the name of the company, which is Olu Enterprise. It's only this person. So in this case, why this person is referred as creditor in Olu Enterprise, that is in Olu account. But in this case now, in Olu account or Olu Enterprise, this person is referred to the debtor. Can you see that? Can you see that? So now it's referring that Olu Enterprise is only this person. That's why it's prepared as creditors. Are you with now? Or you have to say? So now that's exactly what happened there. Alright, so we have, we need to balance it up. How do we balance? What do we balance? Balance means that the debit and the credit side will be equal. We should discuss about the balance. Now we have balance brought forward and we have balance brought back. What's the difference between the balance brought forward? The balance brought forward is just like the balance at the beginning of the year when you just started the business. The actual value you have at the beginning of the business as a cash or as check. Then why the balance brought is just like the balance you made at the end of the year or at the end of the month or at the end of the period while preparing the account. Alright, so now you want to balance it up. How do we balance this? Now here, let's start with this. Now balance debt means that it must be equal. It must be equal. It's not greater than or less than. it must be equal. That's the word balance there. So we have to balance it up. So here this is now my balance carried down. Balance carried down, just like balance brought forward as well. Oh, sorry. Balance carried down, which is the balance at the end. Sorry. Balance carried down is the balance at the end. So I have 40,000 naira so that it will balance. So you can see now it will balance. So I have to bring this one here. Balance brought down. Now this balance brought down can also be read as balance brought forward. Just like you bring it forward, you bring it down. The right balance carried down is just at the end. At the end. I don't know that end. So balance brought down and balance brought down, they are just like they are similar. They are similar. Just balance brought down, they are bringing that value. The value, they are bringing it forward to the next month or to the next year. I do that. You bring the value, the balance of what is left, just like at the end of the day or the year of the business, maybe from January to December, after the end you finalize the account, there is a little amount left or change. Then you bring it forward for the following period for the next year as business operates or commence. Alright, now then the balance brought down will now be like this, which is what we have been discussing there. We bring this one down, this will now be 40,000. Then why this one down, here we have the balance carried down, here the value there is 85,000. You can see balance there, you have balance brought down 5,000. Here the same thing as well, balance carried down 50,000. Then the balance brought down, we have 50,000. Alright, here we have balance carried down 40,000. That is, make sure it's balanced. Then this one is the opposite side, balance brought down 40,000. Then why this one? Balance carried down on 5,000. Then here we have balance brought down 5,000. So then we come to the side. Look at this now. Now look at this. Now we have we put that in two sides. Here we have 90,000, here we have 290,000. That's not balance. So we have to balance the equation that they are equal. How do you do that? What you need to do is that you need to subtract this from this to make sure you balance. So 900,000 minus 250,000. I think we are going to have 650,000 naira. Yeah, 650,000 naira. So that means what am I going to add to this value that will give me the exact value that is here to make sure that it's balanced. So when I subtract this, I subtract this from this. So I'm going to have 650,000 naira. So here I'm going to have my balance carried down of 650,000 naira. Why? To make sure that it's balanced. So make sure that it's balanced. So if I add it up, you see I'm going to have 900,000. Can you see that? Then 900,000. That is this one. The value equals to 900,000. When you add up everything, 900,000. Add up this, 900,000. So then now, so my balance carried down is here, which is 600,000. What is now left to brought forward or bring down, which is going to be balance brought down. It's going to be 650,000 naira. 650,000 naira. Alright. Now in this case, now we want to balance this one. Now we should need to sum up this. Here, sum up this because there's nothing here, so you cannot differentiate. You cannot you can't find the difference. You can't find the difference because there's nothing here. So only found on the left side, on the right side only. So you have to sum this up. We have 950,000. So over here we have our balance carried down 950,000. 950,000. So we have 950,000. 950,000. So this one I came, so I want you to do it yourself, balance it out. And if you have written it down, you balance that yourself. So 950,000. Alright. Now then this is balance right down, so you bring it down. So you have to balance down. 950,000. So that is all on applying the double entry because it's very important to understand the principle of double entry because that's the basic concept of financial accounting. So I think I'm done on that. So next class we will now discuss on the subsidiary book, which is the book of accounting.